Ladies and gentlemen, welcome back to the channel. Thanks so much for being here as always. Today we've got Dirk Hartig, the head of training education at PrimeXBT Academy. He's a really adept trader. He's going to share some of the introductory material that you need to know about getting started on your trading journey. You know, I'm not a trader type of guy, so I figured I'd bring folks onto the channel who have that experience and can share it with you. So Dirk, thanks for being here.
Well, thanks for the invitation. My pleasure to be here today. Hello,
Absolutely.
everybody out there.
Yeah, love it. Love it. So I think the best place to start would be just to give folks a little bit of background about yourself and your history with trading in the crypto space.
Yeah, sure. So my name, you know already, and I'm probably what you would consider a professional trader. So I've done trading in different asset classes for 20 plus years now. Started out as a traditional stock trader, back then still on the floor, you know, where you would throw still those weird hand signs at each other. And then later I progressed into the currency space, specialized on currency options, did this a long time for family office, banks, institutional investors out there. In 2016, turned to 2017, I started focusing on cryptocurrencies as well because they became more liquid, so it matured into really a legitimate asset class that you're looking for as a professional trader. Since 2019, then I'm now focusing on my own trading book, trading here from my office for my own money, not trading for anybody else anymore. Earlier this year, PrimeXBT, which I personally worked with, I run an account there for myself. They approached me, told me, hey, Dirk, you are very successful trading here. We are looking for somebody that can help all of our clients, or the majority of our clients, which are beginner traders, especially when it comes to cryptocurrencies, to help them a little bit, you know, to not step into all those same traps you tend to step in as a beginner traders. Would you like to become our head of trading education? Build up a YouTube channel, make sure, you know, our client base gets well educated so they are successful in trading, basically. And yeah, I've been doing this for a couple of months now. I'm enjoying this very much because, you know, as a trader also, you tend to become kind of like a hermit.
Yeah.
You know, staring at like 6, 8, or 10 screens all day at charts. So, of course, I enjoy the opportunity to share some of the things I've learned on my quite long journey already.
Yeah, I mean, being able to share experience, I think, is key because it helps people that don't have that to level up faster. And so I guess the best place to start, because I'm learning along with the folks that are watching with you, because I mentioned, like, I'm not a trading type of guy, but I think the first question I wanted to ask you is, you know, what would your main initial tips be for somebody who's really just getting started and just entering the crypto space, maybe doesn't have trading experience elsewhere? Like, where do you start?
Well, you start, and actually you just said it, it's all about education by the end of the day. And when it comes to trading, we tend to do things that in normal life we would never do. We would not, in normal life, at least the average person never would jump to conclusions as fast as you do in trading. Trading, especially beginner, you see something, oh, this indicator's up there or down there, that means I have to buy. And when you throw all of your money at once at Bitcoin or Solana or whatever the asset class might be that you're trading right now. And this is like something to avoid. So maybe let me rephrase this. So the typical things you need to avoid in the beginning as a trader are not to be over emotional. You know, when you enter a trade, don't attach yourself emotionally to that trade. By emotionally, I mean that you don't get overhyped when it runs into your direction that you anticipated. And we all know that feeling when you've done a trade and it moves in your direction. You're like, whoa, you feel like Superman or Superwoman, and you think you've cracked the market. And when it runs against you, you suddenly become totally depressed. And this up and down of emotion you cannot take forever. You know, if you do this for weeks and months and years onwards, and always have this roller coaster of emotion, it's going to drain you out, and you're going to take this home, and eventually you're going to die of a heart attack, or you become crazy. So you have to learn to separate yourself from this, and you do so by having a game plan. By determining before you enter a position, okay, I'm entering this position because of reason X and Y. Could be fundamental reasons, can also be technical indicators, whatever style of type of trader you are. And you also have to determine, when do I exit the trade in profit, when do I exit the trade in loss, and when you just let nature take its course. And of course, this is easier said than done. After 20 years, I still cannot completely detach myself from my trading positions, obviously, and it's also part of it, but don't let it overwhelm you. So this would be the first step and a tip. This is a long learning that never ends, in my opinion. Second one is don't use leverage too much. A lot of platforms out there, and PrimeXBT is one of those platforms, offer high leverage. So, for example, you can trade Bitcoin with a leverage of 1 to 100, but just because that is available doesn't mean you need to use it all the time. Use it rarely. Start out with a leverage of 1 to 1, or maybe maximum 1 to 10, which is already quite high, especially in cryptocurrencies, because we see such strong
Volatile.
up and down swings. We're just right now seeing it in Bitcoin again. We, like, half hour ago, we were at 66,000. Now we are at 68,500 already, almost at a new all-time high.
Yes.
So that's a difference already of 4% almost. And that's crazy. And if you're leveraged by 1 to 10, that's a change in your position of 20 to 25% within such a short time span. And so you have to be prepared for this. Don't over leverage, and at least not until you understand more of the fundamentals, how the market move.
Yeah, it's a tool, right? And I think that's something that I've talked about on the channel. Like, because I don't understand a lot of the fundamentals, and I'm not totally comfortable doing that sort of micro reads on charts, I stay far clear of leverage. But I have friends who are very experienced traders who use leverage as a tool when they're like, I'm very confident in this, but they also know the flip side. If I lose this trade, I'm not going to wipe out my account. And that's the big difference, I think, between a beginner and someone who has a lot of experience, is knowing those limits.
Absolutely, yeah. It's all about risk management. You don't want to wipe your account with 1, 2, or 3 trades. And because even if you're correct like 99% of the time, and nobody is that, by the way, even not a professional trader is 90+% correct all the time. On the stretch of 1,000 trades, sooner or later you'll have this stretch of trades where you are like 3, 4, 5, 10 times in a row wrong. And those are the times that your account needs to survive.
And that only happens with risk.
To survive that too.
Yeah. Mentally, you need to survive it. And the only way to do that, though, is with a plan and risk management. And at least that much, I am always, on the soapbox telling people that watch this show, is like, if you're going to trade, you need to have a plan. So with you being here, I think this is a great opportunity. Like, what are some of the strategies that you employ in making that plan and approaching risk management?
Well, I obviously have, throughout the years, literally hundreds of strategies I could follow. I've narrowed it down to 10 strategies over time, depending on what time frame I'm in. I do trade like statistical arbitrage things. I apply a lot of machine learning, but this is for lower time frames. When it comes to like easy things everybody can do, first of all, start with daily charts. Yeah, those block out all of the noise. Don't look at 5-minute charts. Starting with 5-minute charts or minute charts, by the way, when you're a beginner, this is like you're starting to play tennis and you want to play against Roger Federer or Novak Djokovic. You're going to get your ass handed 100% of the time. Sorry to say so, but it is like this. Or, it's like you're starting to learn how to ride bicycle and suddenly somebody gives you a Formula 1 racing car. And so start with the daily charts. And one thing you can do very easy in the daily charts is you draw in where you see zones of support and resistance. It's very easy, go from up to down through the chart, draw in your lines there. Then you look at the sentiment, and you can look, luckily for cryptocurrencies, especially Bitcoin, very easy at the sentiment. There's something called the Fear and Greed Index. For Bitcoin. It's published, I think, 2 times a day. You can access it on Twitter or just Google it. And this goes from 0 to 100. Right now, I think today we're at 75, which means we are at greed. And 75 means the majority of people out there are expecting Bitcoin to go higher. So what does that mean to you? You don't want to go accept the majority of people against the majority of traders. So you might want to look on this daily chart for entries for long positions, for buy positions. And then in the morning, when you get up, you can determine very easy, maybe if a price goes down to this point today, let's say, for example, 66,000 or whatever, then I'm going to buy. And then I'm going to sell at 68,000 or 69,000 again. I'm going to place my stop loss at 65,000. And then you can just close your laptop or turn off your app and go to work. Because I suppose most people out there, of course, have a job they have to attend to every day.
Right.
And which diverts their attention, obviously, from trading then. This is very easy. Everybody can do that. And you, after a while, of course, it takes some practice as well. But after a while, after a couple of weeks and months, you will be amazed about the results actually you can get with a simple strategy like this already.
Yeah, I think it's just that experience of being able to know the patterns. And I think if you do that with small amounts of risk, right? You make smaller trades by value. As you learn the way the market moves and how things work, you can kind of step up. Is that something that you would recommend?
I absolutely recommend that. You always have to start at the status quo. And the status quo is, what do you get risk-free at the moment? And for most people out there, what they get risk-free at the moment is what the bank, for example, offers them in interest rate. And in most of the countries, this is around 0%. If you live in Europe, there's a high chance that it's below zero, that the bank actually takes money for that. So this is your status quo. You have to be better than this. But you also have to be aware, in order to be better than this, everything above that is bought with a risk. So, but let's say if you have $10,000 or euros, I think you are very well able, to outperform those 0%, maybe by gaining 1, 5, or 10% a year, by being very, very selective with a simple daily strategy in choosing your trades. Really patiently waiting for the right setup, not do trading because I want to have a click, 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 click action, but because I want to earn money with it. Treat it like a business by the end of the day.
Right. Yeah. And businesses succeed from controlling their costs and eliminating risk and being quantitative about how they invest. So that's a good analogy. And here's another question for you. So somebody that is in the crypto space, I know a lot of people get attached emotionally to the idea of getting rich overnight, or getting rich in a month of winning trades, right? Especially on altcoins, things that move up 10, 20, 30, maybe 100x in a short period of time. Would you recommend for somebody that's getting started learning the trading markets to stick to maybe more market capitalized assets like Bitcoin or Ethereum, or dabbling a little bit in altcoins? Like that's something that I struggle with a lot.
Well, if it's really for you about trading, about, let's say, on a daily base, on a weekly base, or monthly base, choosing swing trades or whatever you want to call it, then stick to the liquid asset classes. And those in the cryptosphere are mainly Bitcoin, especially Bitcoin and Ethereum. So when it comes, for example, for my day trading action, I only trade Bitcoin and Ethereum, because I need to be completely 100% certain when I want to exit my trade that there's liquidity. And who guarantees me that in, I don't know, coin number 78 on CoinMarketCap, there's going to be enough liquidity to get out? A good example of this, in my opinion, is the Squid token, we just read about. Went insanely up, but nobody could realize their profits because it could not be, you could not get out of your trade anymore. So it's all book profits, but that doesn't count, if you cannot realize them. Of course, it's fun, to also have altcoins. And if you ask me, hey, if I put here 100 or 500 or 1,000 here and there in a so-called, pardon my English, shitcoin, nobody says anything about this. This can be very successful. I mean, we've all read about this account that bought for 8,000 Shiba Inu, what was it, like 12 months ago, and is sitting now on 3 or 4 billion US dollars.
Yeah,
which is
it's
probably
wild.
the greatest trade of the century,
Yeah.
the greatest trade ever in human history. And of course, something like this is possible. But by the nature of human beings, you're probably not going to hold on that long to something like this. If you put in 1,000 and those 1,000 turn into 3 or 4,000, there's a very high chance that the majority of people are going to take the cash out then. And I cannot blame anybody, by the way, doing that.
Yeah, I think that's normal business. And also if you listen to most people, you would say, hey, I'm doing what I'm supposed to do. I'm taking profits when I have them. And yeah, I think there's nothing wrong either with taking profits, even if you are foregoing future. Of course, hindsight's always 2020. You're always going to look back and be like, oh, well, I missed out on another 2x.
I think everybody that started with cryptocurrencies, especially with Bitcoin, has at one point this feeling, my God, why didn't I start in 2011 already? Or even better, 2009.
Yeah, I mean, over the years, I can speak from experience. I throughout the years, I would sell to pay for debt or whatever, and I don't regret it. But of course, you look back and like, hey, if I were in a different situation back then, I would be in a much different situation now. But that's that's the way it goes.
In 2014, early 2014, I was working for a family office in Singapore, and on my way to work, I went through a mall always, and there was a Bitcoin ATM. It must have been actually one of the first ones there. And I remember, I was being so snobbish, really up to here with my banking attitude, and I went by it and laughed at it every day and thought like, who in the world is so stupid to buy something like this?
Yeah.
Well, guess who's laughing now?
Yeah. No, but I respect that a lot, right? The fact that people can shake previously like very deeply held convictions about something and sort of come to a different conclusion later. I mean, that brings up a great point. Your background was in a very different space. It was in, classical assets and like traditional finance. It's like, how different is it trading in crypto than it is trading in those spaces?
It's still quite different. I think crypto is more like you can feel as an experienced trader that it's more of a young asset class. It's wilder. Obviously, you can measure this by the volatility, but trading, especially short-term trading, is always about finding asymmetries in the market's structure. And as I said, I also trade currency options. And if I look at my daily trading activity, I might find 1 or 2 chances, for example, in euro dollar, where I say, oh, there's this asymmetry where I can win more than I have to risk at the moment. Whereas in cryptocurrencies, you find this maybe, if you're lucky, 20 or 30 times. And this is something that will change over time. The more this asset class matures, the more institutional investors, the more investment banks, especially with a computation power, with a algorithmic trading power that come into the space, the more this will change over time. So at the moment, still, I think this is a great time to start trading cryptocurrencies, because it's in the future becoming increasingly difficult.
Got it. And so I guess the entry of institutional investors, as the total market cap of crypto grows, the market becomes bigger, the landscape changes because the market dynamics change.
Absolutely, yeah.
Okay.
Correct, yeah. This is what you see in every asset class. Like you said, really, as institutions enter, the dynamic changes and the margins that are there to earn become smaller. Picture it like this: if you as a trader are competing with JP Morgan, maybe on the 1 or 5 minute charts, they have hundreds of millions of US dollars they can put in algo quant software every day that can execute thousands of operations in the time it takes you to do a mouse click. Who's going to win?
Yeah.
Not you, probably. Not me.
Yeah. That's an easy equation to balance at that point in time. I mean, I guess I know that people that are watching this, right, this will be helpful for them to kind of get started and just think about where to kickstart education and maybe reading. Where are some places that you could maybe recommend? Of course, I think PrimeXBT Academy is probably a great place, but there might be more to start learning the patterns and how to look at charts, how to read things, and how to evaluate, and of course, manage risk management, like money management.
Yeah, of course, like, I mean, come to our YouTube channel of the PrimeXBT Training Academy. This is what we are all about, really teaching you those fundamentals. I mean, we're just at the beginning there and building that up slowly, but it's a great way to start. When it comes to charting, really, I think one resource I always very much liked out there for every beginner is, for example, babypits.com. Which they have, like, it's actually a forex-based course they are offering, but you can translate a lot. They teach you on charts, for example, they are on how the market works in general, also to cryptocurrencies. So you might want to visit that as well. But of course, I'm happy for every listener or viewer that says, like, hey, I'm going to check out the Trading Academy. I want to look what this bald guy has to say there every day on cryptocurrencies.
I'm sure you'll have some takers on that, Dirk. I definitely think you will. And of course, folks, that'll be linked in the description below. That's what every YouTuber says, linked in the description below. But it's there. I know I wanted to kind of close with this, kind of get your thoughts. It's interesting to get a wide variety of different opinions on this. Like, what is your long-term view on Bitcoin and cryptocurrencies? Because a lot of people, I think, that are watching this are considering trading. They might dabble a little bit, but many will be more comfortable in the sort of long-term buy and hold type of investing. So what are your thoughts?
Yeah. So the classic hodling, so to say.
Yeah.
And well, I'm obviously extremely bullish, especially for Bitcoin, more bullish, by the way, than for Ethereum. But this is a whole different discussion. Let's not get into this and the different proof of stake, proof of work algorithm philosophies. And for the main reason that I think it's the only real hedge you have left out there when against inflation. And just yesterday, we saw that inflation is very, very real. We saw the manufacturing prices in the USA year to year rising by almost 9%. And you can be sure that you are going to, feel this in your pocket also very soon. You are actually feeling it already when it comes to, for your daily groceries, by the way. So this is insane what is happening there. Now, the average household of the younger generation, so that people that are in the 20s or 30s, they have no chance anymore of hedging against it by buying real estate. Who nowadays that is at that age can afford like a house that costs $500,000 or $1 million or more? And we're not talking about villas here. We're talking about simple homes here. And so they don't have the same chance anymore that people had that were like 2 or 3 generations before them. And so real estate is not an option anymore. Bitcoin is the last real inflation hedge is there. So it's naturally going to appreciate against the US dollar and other currencies. I'm a big fan of Plan B's stock to flow model, which forecasts for this halving season, so to say, so the one until 2024, an average price of 100,000 US dollars a Bitcoin. We see it rising towards this slowly or sometimes faster at the moment. And by the amount of money that is printed at the moment by worldwide central banks, I wouldn't be surprised to see prices of 300, 400, 500,000 US dollars in the near future. But it's going to be volatile. So if you want to hodl, be in for the wild ride. We could see things like, it's going up to 200,000 just to go down to 20 or 30,000 again. This is in the realm of possibilities. So the best strategy to conquer this, in my opinion, is to DCA. So have a fixed amount of US dollars or your local currency you are willing to exchange to Bitcoin every month or every week or whatever time period you prefer that. And you'll see over the years the magic this will be doing for your wealth and also for your well-being. And by the way, if we look at your whole net worth, so to say, you should put 75% of those into this hodling strategy. Hodl, just don't look at too much at the, at the charts and the daily up and down. And maybe with 25%, you can try to time the market and trade a little bit and have a little bit fun and learn about how market structures work.
Yeah. So, for the average person, obviously being very, focused on your risk management And of course, being very cognizant of the fact that you want to not risk or put money into assets that you need to feed your family, that you need to survive, these sorts of things, because it's a volatile ride. If you need to get out, it might not be worth what you put in there.
And it's always like this. If you need to get out, it's always the worst time.
Oh yeah,
I guarantee you.
That's the way the universe works, Dirk. That's the way. That's the way. But I really appreciate you taking the time to share. I definitely picked up a few things, and also just a path to continue learning. We'll have to do another show, and maybe we'll dive a little deeper into some of the topics that we hit at the surface level. But really appreciate it. Thank you.
Yeah. Thanks so much for having me, and take care, everybody out there, and hoping to see you on YouTube soon.
Absolutely. Thank you to everyone who's watching. If you have questions, leave them in the comments below, as always. And hope you and your family have a wonderful week ahead. Until next time, cheers.